It's one thing to win a trade, it's another to be consistently profitable. Each time on the winning trade, we take a look at successful option strategies that take advantage of the current market conditions through the passage of time. For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
Hello, my name is John Locke, and I'd like to welcome you to The Winning Trade, but first, the required disclaimer material. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial, and please make sure you are aware of all your risks prior to placing any trades. Also note that any trades and the results shown in this presentation, please consider them to be hypothetical computer-simulated trades and the results. They would be believed to as accurately represent as possible. Keep in mind, live results can vary from simulated results for many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance, wealth, and success coach with Lock in Your Success LLC, and myself and my team of mentors are here to help you win in the markets and in life as well. And I'm here to take you into the realm of something called high probability options trading. It's also known as income trading and positive data trading. This is where we use option strategies to make money from the passage of time rather than depending on price movement alone in order to be profitable. This doesn't mean we're going to be profitable all the time, but we can often make money whether the market goes up, down, or sideways. And the option strategy I'd love to share with you today is called the X4 version 17. The X4 version 17 is a high probability positive theta broken wing butterfly strategy that we use on the SPX index. The strategy, as shown, requires a minimum of $1,500 per trade. Our example size is going to be $15,000 planned capital. As far as profit targets, we get as much money as we can out of the strategy, so we don't have a profit target. But in general, we expect a really good month to return about 15%. Our exit loss trigger is about 16% of our planned capital, or $2,500. This strategy has been a fantastic strategy for us. For example, just in the last 10 trades, we've won the last 10 trades in a row, and the management on it is extremely simple. It's very hands-off. Often it's just an entry and maybe one or two very minor adjustments and then an exit, and it's just performed very well over time. So let's take a look at the strategy. But before we do, I'd just like to mention or request that you please share and like our videos and make sure you comment if you have any comments you'd like to make. It helps us understand what you like. It helps us continue to provide this exciting content to you. So this is the X4 version 17. This analytical software is called OptionNet Explorer. It's a great backtesting software and modeling software for complex option strategies. If you have not seen this before, please go to a past winning trade episode. We have many of them. If you go to one of the earlier ones, we give you a brief description of how to look at this. But what we have is the X4 version 17 is a broken wing butterfly strategy, as we said, on the SPX. Our asset price in this case is $42.84, June 2nd, 2023. We're going to come in here 17 to 27 points under the money with our 42.60s. And we're going to start with a 60-40 broken wing butterfly. So that would look like this. 60-point wing to the downside, 40-point to the upside. I'm going to take a look at our delta number. It should be positive, and it should be less than 10. This is positive 15. So that's outside of our entry guidelines. So what we're going to do to correct for that is we're just going to take half of these upper strikes, and we're going to roll up 10 points. And that gives us a delta of 865 that is within our entry criteria. So this is the way we're going to enter it. And we would enter it as two butterfly orders. We have 4,200, 4,260, 4,300, and 4,200, 4,260, and 4,310s. This is what our analytical graph's going to look like. From here, basically, the trade maintains positive delta. So long as it's positive delta, and it's over our short strikes, we basically do nothing here, which is most trades. If we start going negative delta on the position, what we're going to do is we're going to take these long strikes and we're going to roll them down. If we go too far back and we get under the short strikes, say the market went to 42.50, then we would take this position off and we'd roll it back into our entry position once again, and we continue trading it. The trade is exited when the cycle 2 months ahead is 77 days to expiration, so it's August expiration. When our October expiration gets 77 days to expiration, then we are going to exit this. Again, there's nothing magical about a monthly cycle. You can do it in a weekly cycle. The important part is you got to find 2 companion cycles ahead and just figure out where that exit's going to be from a time standpoint. From here, I'm going to quickly go through this trade, and it's going to be relatively fast because the reality is this is very hands-off. Usually you enter the trade, you exit the trade. Sometimes there's a couple of minor adjustments in between. In a bear market, you'll be rolling this back a little bit from time to time. But other than that, it's generally very, very hands-off and easy to do. So let's just quickly go through this, and I'm just going to go to first adjustment so that we can demonstrate that. So remember, it's June 2nd. We sit in the position for 28 days. It's June 30th. And what's happened is the market ended up going up quite a bit. It's gotten to the point where we started to turn a negative delta on the position. So what we're going to do is we're going to simply take these 5. We're going to bring it back there in a vertical position. And that is going to be our adjustment. And I would say that that's going to be our adjustment most of the time. One of the things you'll notice here, and a mistake that I made when I traded this. So this is a position that we trade on Options Trading for Income, which is the meeting that we do with our Go members every week, Monday morning, where we go over 12 different powerful non-subjective trading strategies, real time as they're going along in the marketplace. Sometimes we make mistakes. And what's my mistake here? Well, my mistake here is that we have a planned capital of 15,000, and this adjustment puts us up over 15,000. So when that happens, what we're going to do is we're going to actually move this long here up. That's going to kick us a little bit more negative delta. It's going to have to make our adjustment a little bit more aggressive to the upside. But we would kick this up like this to bring the capital level down, and we would go here. Again, I didn't notice that in this particular trade, but this would be the adjustment according to the guidelines. I'm going to show you the way that we did it. Either way, the result would have been pretty much exactly the same, except we would have just had more capital in the position. So let me clear that trade out and show you this trade. But if you're asking why we're over our planned capital number, that is why. Okay, so this is here, and again, we're up $799. If I go to next adjustment, what happened is more time went by. Let me zoom out on this so you can even see the price. This was a time period where the market went up like crazy. When we put this on, the market was way down here. It's all the way up about 300 points higher. We are negative delta again, and that being the case, we are going to make another adjustment. And by guidelines, our adjustment would be slightly different, but the results are pretty much identical. I've ran out and back tested it both ways. It doesn't really matter. But we're going to do this here, and that's going to bring us to a positive 1.31 delta. And this is our position going forward. Now, we've had 2 adjustments in the entire time we've been in this, and it's now, July 26th? And we're going to be exiting this fairly soon. So we're waiting for our October to be 77 days to expiration. And if we go through all these cycles that we have here, our October is currently 86 days. That means we're going to be in this position, about another week and a couple of days. So that's pretty much what happened for the rest of the trade. And then if I just ignore this trade and I go to my next adjustment here, this is what our position looks like on exit date. We're up about $1,300. And again, Our October is going to be 77 days to expiration. So we're going to close this for a profit of about 8.4% of our planned capital. And that's it. Most of the time, this trade hardly requires any work. I mean, think about it. You've been in this trade for about 2 months. You've literally entered, exited, and made 2 very, very minor adjustments. So this was the 10th consecutive win for the X4 version 17. We're currently in the September cycle. That looks like that's probably going to be fine. The return for this trade was 8.4% of our planned capital in 63 days. Our trade-for-trade return on the X4 version 17 for the year is 78.3% of our planned capital for 2023. And that is on a strategy that is extremely simple and extremely easy to manage. And that is the X4 version 17, this episode's winning trade. We invite you to follow and like our YouTube channel, and also to come on over to lockeinyoursuccess.com. That's LOCKE in yoursuccess.com, and discover how you too can follow along with this and many other great strategies as they unfold during our weekly Options Trading for Income webinars that we hold for our Go members. Also, make sure you check out thewinningtrade.com. That's thewinningtrade.com, where you can learn about upcoming winning trade presentations, explore past winning trades, and where you can check out our free trading performance podcast, where you can learn to skyrocket your trading regardless of the type of trading you do. If you have any questions, comments, or anything else you'd like to see in the next winning trade, please make sure you post that in the comments section. And if you have any questions, again, I answer them for you personally, so make sure you send those to me. Thank you for joining me. I look forward to seeing you on the next winning trade.